The median fee for sending a domestic wire transfer in the United States in 2026 sits between $25 and $30. The free alternative, a standard transfer over the automated clearinghouse network, known as ACH, takes 1 to 3 business days to arrive. Both payments travel under the same 9-digit routing number printed at the bottom of every American check, and that number was designed by the American Bankers Association so clerks could sort paper checks by hand across a network of roughly 25,000 banks that no longer exists. A reasonable guess would put that design in the 1970s, somewhere near the first computers. A generous guess might reach back to the punch card era. The real date is 1910. When the committee that numbered America's banks finished its work, the Federal Reserve would not exist for another 3 years. The system routing your direct deposit, your mortgage payment, and the $93 trillion the ACH network moved in 2025 was drawn up for men sorting paper into pigeonholes. Nobody ever replaced it. Every payment system America has built since then was stacked on top of it instead. The assumption feels reasonable enough. A number that routes electronic money must have been engineered for electronic money. It was not. Geography and population shaped its design, and the fossil remains visible today. When the numbering began, the first digits encoded a ranking of American cities by size. The 49 largest cities as of 1910 received numbers 1 through 49, while every bank outside those cities was folded into a state code running from 50 through 99. Part of your bank's identity right now is a record of how large its home city was 116 years ago. What happened next became the pattern. Congress created the Federal Reserve in 1913, and the new central bank did not replace the numbering scheme. Instead, the 12 Federal Reserve districts were folded into it. By 1952, Americans were writing more than 8 billion checks a year, which meant the hand sorting those numbers were designed for collapsed under the volume. The response, once again, was not replacement. Stanford Research Institute and Bank of America built machines to read the old numbers instead, using magnetic ink and the blocky E13B font the American Bankers Association adopted in 1958, the same font still printed on every check in your drawer. Then came 1972, when the Federal Reserve Bank of San Francisco built the first automated clearinghouse, the electronic network behind direct deposit, and the Fed built it directly on top of the same numbers. Cut-off times, processing windows, settlement measured in days rather than seconds. The ACH network moves money the way clerks once moved paper, in scheduled batches, because that is the architecture the network inherited. Every layer traces back to the same origin point. A specific meeting held in a specific city, run by a committee small enough to name. December of 1910, in Chicago. The American Bankers Association gathered the managers of the nation's clearinghouses because banks could not agree on how to identify one another. Out of that meeting came a committee of 3 bankers, and the surviving record credits W.G. Schroeder, C.R. McKay, and J.A. Walker, carrying one task between them: assign every bank in the country a number. Rand-McNally printed the result in May of 1911 as a national directory, and the banks received exactly what they wanted: paper checks that could be sorted, bundled, and shipped without argument. That resolution never stopped running. In July of 2023, the Federal Reserve launched FedNow, an instant payment network built from scratch, operating 24 hours a day, every day of the year. Before a bank can go live on FedNow, it must first register its routing number from the 1910 scheme. The newest payment rail in America cannot identify a bank without it. As recently as April of 2026, the Federal Reserve was still amending Regulation J to adjust how those numbers behave inside its wire and instant systems, extending the scheme rather than replacing it. Replacement would mean rewriting every core banking platform and every payment format in the country at the same time, and no institution has ever volunteered to absorb that cost. Which is why, in 2026, moving your own money carries 2 prices. Pay $25 to $30, and a wire moves it the same day. Pay nothing, and the money enters the batch queue, the direct descendant of the sorting room, and arrives in 1 to 3 business days. The committee met 116 years ago. Nothing built since has replaced its work, only inherited it. The $30 is the price of skipping the queue the sorting room left behind.